Can one company truly define a technological revolution? In the world of technology, few names carry as much weight as Nvidia, a company that has become synonymous with the rise of artificial intelligence. Nvidia, now the face of the AI boom, stands at a crossroads where record profits meet global power struggles. Its influence stretches from Silicon Valley boardrooms to the halls of government, and its decisions could alter the course of the entire industry. At stake, $8 billion in revenue threatened by U.S. export controls on China. These restrictions don't just impact Nvidia's bottom line, they send shockwaves through global markets and raise questions about the future of international tech cooperation. This isn't just about chips or stock prices. Nvidia's fate signals shifts in global power, AI leadership, and the delicate balance between corporate ambition and government oversight. The stakes are higher than ever, with every move scrutinized by both allies and rivals. The world is watching, because what happens to Nvidia will ripple across the entire tech ecosystem. Investors, engineers, and policymakers alike are holding their breath, waiting to see how this drama unfolds. On one side, explosive growth, driven by insatiable demand for AI chips powering everything from ChatGPT to scientific breakthroughs. Nvidia's technology is at the heart of a new era, enabling innovations that were once the stuff of science fiction. On the other, U.S. policy is cutting China off from Nvidia's technology, putting the company in a precarious position. The tension between open markets and national security has never been more pronounced. As the next earnings report approaches, the question is clear: can Nvidia's global AI momentum overcome the China headwinds, or is a reckoning coming? The outcome could redefine the competitive landscape for years to come. The answer will shape not just Nvidia's future, but the future of innovation itself, setting the tone for how technology and geopolitics will intertwine in the decades ahead. Nvidia's last earnings report didn't just beat expectations, it shattered them, sending shockwaves through the tech and financial worlds with its record-breaking revenue. This explosive growth was driven almost entirely by its data center division, fueled by insatiable demand for Nvidia's coveted AI accelerators, chips that have become the backbone of modern artificial intelligence. Demand reached unprecedented heights. Tech giants and ambitious startups alike scrambled to secure Nvidia's GPUs, now seen as the new digital gold powering the AI revolution and shaping the future of technology. This overwhelming appetite allowed Nvidia to command premium prices, resulting in industry-leading profit margins and a surge in investor confidence. But beneath the surface, a warning sign began to emerge, one that could not be ignored. Nvidia was hit with a multi-billion-dollar inventory charge, marking the first significant financial blow from tightening U.S. export controls on China, a crucial market for the company. Nvidia's workaround, designing lower performance chips for China, was rendered useless by even stricter regulations, forcing a costly write-down and highlighting the limits of adaptation. The message was clear. Even at the height of its success, Nvidia isn't immune to the unpredictable forces of geopolitics and global power struggles. The impact of the China ban is real, and the risk it poses to Nvidia's future is now front and center for investors and industry watchers alike. Nvidia's story is now one of massive world-changing success, shadowed by profound uncertainty and new challenges on the global stage. The world is watching closely, waiting to see if this tech giant can continue to defy gravity, or if the forces of geopolitics will finally bring it back down to earth. As Nvidia's next earnings approach, Wall Street is split, with investors and analysts intensely debating what comes next for the chip giant. The bulls see unstoppable global demand for AI chips, arguing that even without China, Nvidia will sell every chip it can make. They point to the company's dominant position in powering the world's most advanced AI systems and believe that the hunger for computing power is only accelerating. These optimists believe the AI build-out is just beginning, with new data centers and applications emerging every day. In their view, Nvidia's growth can easily absorb the China hit, as demand from the US, Europe, and other regions continues to surge. The cautious camp, however, sees the $8 billion China risk as a whole too big to ignore. They worry that losing such a massive market could have ripple effects across Nvidia's entire business. These skeptics argue that demand elsewhere may not fully offset the loss, and that the market is pricing Nvidia for perfection, leaving little room for error if growth slows or competition intensifies. Competition is also heating up. AMD, Intel, and even Nvidia's own customers are developing rival chips, hoping to grab a share of the booming AI market and challenge Nvidia's dominance. The cautious analysts will scrutinize Nvidia's guidance for any sign of slowing growth or eroding dominance, looking for clues in every detail of the company's outlook and strategy. The next report isn't just about numbers, it's a test of whether Nvidia's AI story can outpace its growing risks, and whether the company can continue to deliver the kind of explosive growth Wall Street now expects. The stakes couldn't be higher, as the outcome could shape not just Nvidia's future, but the direction of the entire AI industry. Nvidia's China strategy will make or break its stock. If the company beats expectations and shows it's managing the export ban, the stock could soar to new highs. Investors want proof that global demand is strong enough to offset China's loss. CEO Jensen Huang's confidence and vision will be critical. If he projects resilience, the market will rally. But if Nvidia signals that China's absence is dragging on growth, the stock could tumble. Any sign of weakness could trigger a sharp sell-off and force a re-evaluation of Nvidia's future. The market is watching for a clear signal. Is Nvidia's growth story truly bigger than any single country? Nvidia's earnings don't just move its own stock, they move the entire tech sector. A strong report lifts chipmakers like AMD and TSMC and signals health for the whole AI ecosystem. Cloud giants, Amazon, Microsoft, Google, are major Nvidia customers, so their fortunes are tied to Nvidia's outlook. Even cryptocurrency markets can react, as Nvidia's success boosts risk appetite across speculative assets. Nvidia's results have become a macro event, a barometer for tech innovation and investor sentiment. A blockbuster quarter can fuel a market-wide rally, a miss can trigger a broad sell-off. That's why traders, economists, and investors everywhere tune in. Nvidia's fate is now the market's fate. As Nvidia goes, so goes the market. The stakes are global. For investors, the real story isn't just in the numbers, it's in the details. Watch trading volume before and after the announcement for signs of big moves. The conference call is crucial. CEO Jensen Huang's tone and answers on China, demand, and competition will be dissected. Forward guidance matters more than past results, especially for the data center division, Nvidia's growth engine. Any hint of slowing growth or uncertainty could spark a sell-off. Investors will also look for updates on Nvidia's next-gen AI chips and software platforms. A strong roadmap can reassure the market, even if short-term headwinds persist. The future of Nvidia and the AI boom may hinge on what's said between the lines. Nvidia stands at a defining moment. Its chips power the AI revolution, but geopolitics now threaten its dominance. The U.S. export ban on China casts a long shadow over every earnings report. The upcoming quarter is a test. Can global AI demand make China irrelevant, or will the ban expose a fatal weakness? Investors must look past the headlines, scrutinize guidance, and read the signals. The market expects near perfection. Any slip could trigger extreme volatility. Nvidia's results will ripple across tech, markets, and even crypto. Will Nvidia reaffirm its dominance or reveal the first real crack in its armor? The answer will echo through the markets for months to come.